Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video we're going to be doing a stock analysis on the second company in the Dow analysis series, and that is the Travelers Company, ticker symbol TRV. And as you can see here in the spreadsheet, it's currently valued at a market cap of around $44.6 billion, which is pretty impressive. Obviously, it's the second smallest in the entire Dow, so some of the other ones further down are a lot more impressive in terms of their market cap, but $44 billion is nothing to shake a stick at. This is actually one I own in my dividend portfolio, so that's pretty exciting. And the first thing we're going to take a look at is the 2021 Travelers Annual Report. And there's actually some pretty interesting stuff in here that I wanted to go over. So the first thing was about full year income. So full year income was $3.5 billion for 2021, which was an increase of 31% year over year. And then they had net written premiums of $32 billion. So that means basically received $32 billion of insurance premiums. And then obviously they had to pay out a fair amount of that. So, they didn't get to keep all of that. But they also they mentioned returning about $3 billion of capital to shareholders, and they don't really mention it until pretty far down in the 10K, but about 2.2 billion of that was from share repurchases, and then about 870 million of that was from dividends, which is pretty exciting. They have a fairly low dividend yield, I guess, compared to some other dividend companies, but it's still, pretty solid for sure. And the other thing that I wanted to look at, so like they said, $3.5 billion of net income and $13.94 per share, which is obviously up 33%, like we mentioned. And then they said that their underwriting income, part of that net income, was about $2.3 billion after tax, which means they basically paid out $2.3 billion less in claims than they received in premiums for the year. And they actually talked about one of the reasons that it grew a fair bit. So it says their average underwriting income for the past 5 years was 34% greater than the average for the previous 5 years, or the 5 years previous to that. And underlying income as a percentage of total income was at a historically high level. And one of the reasons they mentioned, I'm not sure if they mentioned it right here, was basically that the amount of, court cases and settlements and stuff like that in 2021 was pretty low compared to, historical averages, I guess. So that's part of the reason. Basically, they had to pay out less claims than they have had to in the past few years. And so I think it's, to me, that points to maybe this is sort of an anomalous year in terms of being a better performing year than normal, I guess, because of that fact, and that we could probably expect some of those court cases and settlements and amount they have to pay out in claims to kind of increase a little bit over the next few years to kind of get back in line with that historical average, I guess. So that's just something to keep in mind. Obviously, I would say overall the results from 2021 were pretty fantastic. They also talked about, their investments. So over the past 5 years, it says here their investment portfolio grew an impressive 16.9 billion, or 24%, to 87.4 billion. So before, I think it was around $69 billion, maybe around $70 billion, and now it's closer to $87.4 billion. So that's pretty interesting. And they have sort of a mixed strategy between equities and some bonds and other things that their, I guess, goal is to, have really decent investment returns in all sorts of market conditions. And so they mentioned somewhere that their investment returns basically were up, in 2020. So yeah, they basically are talking about it here, I think. So in 2020, we saw record low interest rates and significant volatility in the equity markets that negatively impacted returns from alternative investment portfolio, but they still delivered net investment income of $1.9 billion in 2020. But in 2021, they saw, good performance in the alternative investment portfolio from the recovery in the equity markets. And the other portfolio didn't perform quite as well, but they were still able to provide investment income of $2.5 billion after tax, which is just kind of going to show that some years, some part of the portfolio is going to do better than others, but overall, they are hopefully still going to be able to produce increasing investment income over time and use that in order to drive their business, really. And they talk about underwriting income a little bit, which is obviously just the difference between the premiums received and the claims paid out. And I think they have a nice graph down here that sort of shows their business segments. So they have these 3 business segments, and then they break them up a little bit further. So this sort of breaks down their 2021 net written premium. So the first is the business insurance segment, and in 2021, I think they had net written premiums of about $16.1 billion. So that's about half of their business. As if you recall from earlier, they said they had net written premiums for 2021 in total of about $32 billion. So that's about half their business right there. And then they break it down: workers' compensation, commercial multi-peril, commercial auto, general liability, commercial property, and international. And then they have bonds and specialty insurance. They have international, surety bond, and management liability, which this segment is a little bit smaller, with net written premiums of around $3.4 billion. So that's probably about 10% of the business. And then personal insurance, they have international, homeowners, and auto insurance with net written premiums of around $12.5 billion. So that's probably around 40% of their business. So overall, they're, obviously about half their business is in this business segment, business insurance segment, but within that, they're fairly diversified, and they have some nice diversification within these other segments as well, which is definitely good to see. So overall, 2021 was a fantastic year for Travelers, and I think it was probably sort of better than average, and so we might see a little bit of a decrease next year, or just not nearly as much growth. I think that's definitely possible, but over the long term, I think they're going to continue to grow those revenues and income from underwritings and investments. So overall, I think the future is bright for Travelers. We can look at the dividends, like I was saying, fairly lowish dividend yield of around 2%. Payout ratio, though, only 25%. So they have plenty of room to grow the dividend. Like we said, earnings were around $3.3 billion, I think, and dividends they paid out in 2021 were like $870 million. So plenty of room there to grow the dividends. 5-year dividend growth rate is a little bit on the lower end of only 5.6%. But that's not really that big of a deal. It is sort of a financials company, an insurance company. So I would say we wouldn't expect them to be growing the dividends super rapidly. And they have been, I would say, repurchasing shares at a pretty awesome level. So that as shareholders also benefits us a lot. And they have been growing the dividend around 16 years, which is it's a pretty decent amount of time. Definitely shows us they have some commitment to the dividend, and obviously they were able to continue increasing it during the financial crash or crisis, I guess, in 2008, which is definitely good to see. If we move on to sort of the valuation perspective, we can look at their PE ratio over time. You can see through the 2010s, I would say, it was really trading around 8, 9, 10 PE ratio. But around that time period, they weren't really growing the earnings that much. They actually decreased some in 2017, 2018 timeframe. But since 2020, they've really been able to grow the earnings pretty rapidly. So right now, the PE ratio is sitting around 12.7, and the stock price, though, has done pretty well over the past year or two as well, so that's something to note. And like I said, I don't think earnings are going to increase this much as they have over the past few years, over the next few years, but I think there's still plenty of room for growth, maybe just not quite as quickly as we've seen these past few years. So the PE ratio is not looking bad, especially since the stock price has done so well over the last quarter. And in terms of comparing it to the overall sector, the financial services sector, the average is around 17, so they look good in that perspective, but the insurance industry, their average is around 11. So in that sense, Travelers, their average is a little bit higher. than the insurance industry right now, but like I say, sometimes those higher quality companies are going to trade at a little bit of higher price, and that's just kind of the price you have to pay for that higher quality. And if we look at it from a discounted cash flow model, things get actually pretty interesting. So I did the calculation, and I tried to be fairly conservative with some of the numbers, and I still got a fair value of around $365 with a buy price of $328 per share, compared to the current price of $184 per share. So that's pretty astounding, that difference. And like I said, part of it is the past year or two. We can see the free cash flows were $6.5 and $7.3 billion the past year and the past 2 years, basically. And based on my estimates, the free cash flows are my sort of conservative estimates, I guess, are projecting the free cash flows to be between $4 and $5 billion over the next few years. So I guess the point is that the last year and the year before, free cash flows were a little bit higher, so that's kind of elevating the projections a little bit higher than maybe they would have been. But overall, I think this is very interesting. And also, they really don't have much debt at all, only about $6.5 billion of net debt. I think they have like $7.2 billion of debt, but when you subtract off their cash position, it's basically $6.5 billion of net debt, which is really not that much at all, I would say. So, from a DCF perspective, they look very nice, but oftentimes DCF isn't really the best way to, evaluate companies in the financial sector, but for me, it's kind of what I'm most comfortable with. So I'm definitely going to use it as a benchmark, but it's not, the holy grail for me of using like one number to determine what a company is worth, but it's one of the factors that I do keep in mind. So we're also going to take a look at a chart finally. So this is the 2-year chart. And we can actually see basically all of 2021, they were kind of trading right here in this, 150 to 165 range pretty steadily and accumulating a large amount of volume, as you can see over to the right here. So that's pretty interesting. Nothing really interesting was happening in that time period for their stock. Obviously, they were down here below, $100, around $85 in last May. Which is probably when I started buying, right around this bottom here, I would say. But it was the amount I bought here, is pretty small compared to my overall position now. Originally I had a pretty nice average price, but over time that's sort of averaged up. And if we look a little bit closer, 1 year, 1 day, we can see they still have a lot of volume here between 150 and 165. Right now they're trading around $184, which is I would say a little bit higher than I would want to see. Would definitely like to see them closer to this 170, probably below 150 before I really got excited about buying the stock that much. But if we're looking from the DCF, again, this stock price looks pretty good, but right now I would say they're a little bit overextended above this 50-day moving average. So I would definitely like to see them drop down a little bit more before I'm interested in buying. So definitely would love to hear your guys' thoughts on the stock in the comments down below. If anyone does invest in the Travelers Company, it's obviously an insurance company, so it's not super exciting. But the side of insurance companies I do find kind of interesting, is obviously they have a large investment portfolio, which is kind of what I'm trying to accumulate over time. So it's kind of interesting to see what they're doing there. But like I said, insurance companies, not that exciting, but let me know what you think in the comments below. I just want to thank everyone for sticking around to the end, and I will see you in the next one.